Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 12th of April, 2019. Hope you had a good week of trading. The market continues to add to its gains month to date. We're showing some pretty strong numbers here. We did get derailed in the biotechs this week, but overall, the market continues to be super strong. The S&P up 16% year to date, and the NASDAQ up 20%, being led by the semiconductors up 30%. So no one has been able to pick the top. We've talked about levels of potential resistance all the way up, and now we see the financials are starting to maybe take some leadership after some earnings today. Let's look at this S&P 500. We're starting out right now with a 15-minute chart, meaning each candle represents 15 minutes worth of data. And on here, just backed it up a little bit, this is our month-to-date volume-weighted average price. I've mentioned this numerous times, that as long as we're above this level, we continue to see the buyers in control. And I was talking about this as the band of support that we wanted to see hold. I've been telling subscribers this week, as long as we're above that level, that the buyers are in control. In that level, we're cautious, and below, we become a little bit more bearish on the intermediate term. But we saw the market obviously gapped higher today and held onto those gains. Now what we're going to be looking for is this prior little band of resistance over the last week to become support early next week. And that's where we'll see that rising 5-day moving average as it catches up to the market as well. So backing up to a daily time frame and adding a little bit more data, we can see that we're fast approaching the all-time highs in the NASDAQ, just about 3 points, 3.5 points away or so. And it looks like a realistic expectation that that's going to happen in the fairly near term. The danger, of course, is we've come very far quickly. That is this uninterrupted rally from the December low. And that has, got to be a place where people are thinking of maybe taking some profits, the old highs, that is. So it's another potential level of resistance. There's nothing at all that says it will be resistance, and my focus as always will be to maintain my bias based on the intermediate term trend, which obviously remains higher. These here are 30-minute candles, and on this 30-minute time frame, I have a 5-day moving average. That's the orange, and that's represented by 65 periods. There are 13 30-minute periods per day, or 390 minutes per day. So 65 of those candles is the construction of 5 days. So again, as long as we're above that, it's innocent till proven guilty, and the same is true for the NASDAQ. Here's our month-to-date volume-weighted average price. Here's our rising 5-day moving average, which has been holding a support, and we see that this market is also rapidly approaching all-time highs. It's up 28%, 29% from the lows. So you have to look at each stock based on its own merits. I mentioned that on Yahoo Finance the other day, talking about NetEase, NTES, and that you want to look for stocks that are emerging from bases that still look like they have room to run. Here's a weekly chart of NTES. You can see the volume-weighted average price off the peak. We just got back above that about a week ago, a week and a half ago, and it did so on an increase in volume, followed by lighter volume in here. So this is one of the ideas that I have my eye on. I don't think it's quite ready yet. What I'd like to see is that the month-to-date VWAP, or at least this band of support, holds if we see a little bit further weakness, and then to buy some strength. Let's talk about the Russell 2000 quickly. The Russell 2000 is showing what looks pretty constructive in here. We've got that 20-week or 100-day moving average that's held as support, going down to a daily time frame. You can see that's exactly where we saw a couple weeks ago that the year-to-date volume-weighted average price was tested and held. We saw a slight pullback this week that came down right to this prior little peak and this level of support. So now we're looking at this as our band of support in here, basically between 154.75 and 155. We also do have a rising 5-day moving average in here, and this market has been a laggard. If you look at the way it's performed relative to the other markets, again, it's been quite far behind that. It's getting a little bit stretched up here, so maybe it runs up through this level, pulls back, and then gets going. A lot of times when you see a market run up through a level, after it's been extended and make a new high, a lot of people look to buy that, shorts look to cover, but what the smarter money generally sells into that level just for a short term as it experiences then a pullback, and then we typically get the bigger move. So that's something to be aware of as a possible scenario for the Russell 2000. It's not something that I'm betting on right here, right now. It's a scenario, and we want to outline the potential scenarios when we see a market move. The semiconductors on this weekly chart, you can see, have closed at an all-time weekly high, and on that daily time frame, we can see that's the same case here as well. All-time high for the semiconductors. It's tough to be bearish the market, and in particular the NASDAQ, when the semiconductors are at an all-time high. So, a lot of people are looking at this market and saying it's up too much, it can't go any further. But again, we continue to see the important intermediate term levels support the bullish thesis. That is the rising 5-day moving average and that month-to-date volume-weighted average price. Now we have just broken this little band of resistance. So next week we'll be looking for this to be the potential area where we see support if we can either continue to move higher or come down and test this bounce, or maybe come down, test it, and break down. I don't know what's going to happen, but we want to know our scenarios and find our low risk, high probability entries and then manage risk. The path of least resistance continues to be higher. Not true, however, for the biotechs. The biotechs broke down this week. We saw the failure here at the 5-day moving average once it started to flatten out and decline and then breaking down from there. We're also stuck, as we said, below that 5-day moving average and the month-to-date volume-weighted average price. So a much different story for the biotech stocks. When we look at the daily time frame, though, it's really kind of neutral. I mean, it's really a big mess. This week I had warned that we didn't want to buy this breakout because, again, where had it come from? Some people, went and bought that break higher, but we were seeing a pullback from there. Now we're down to the 50-day moving average. We've got the year-to-date volume-weighted average price below us. I don't think these biotechs are going to break down hard from here. I think they're just in a more neutral range that will take some time to resolve. So best off just, I would say, to leave those alone. The financials did break some resistance here, and this group, you can look at this as, if you want to put a pattern on it, you can say that was a shoulder, this is a head, and here was our right shoulder. If that's the case, we can measure very conservatively and say 22.5 was the neckline, was the bottom of the head, and we'll put the neckline right here at about 27. So that gives us a price objective 4.5 points higher. That would mean 31.5 is the potential for this target, and that would bring this market to new all-time highs. Now, you've got to remember that this is a pattern, and this is what the pattern suggests. It's not by any means, in my opinion, a market call that you can buy this expecting it to go to 31.5, but it is bullish in the intermediate term, and as long as we remain above this little band of prior resistance, I think you have to look at it as the buyers are in control and it's innocent till proven guilty, and manage risk against this level. Above 26.5, I don't think you overthink it. It's bullish, and that's the way you need to look at this market. That's going to do it for now, and I hope you have a good weekend. Thanks for tuning in.